Hello, everybody. Welcome to this webinar brought to you by Kenanga Investment Bank and managed by Wellford. And this session is brought to you in collaboration with Bursa Malaysia as well. So today, our webinar will discuss about this topic on making friends with trends. So that is the title for today. As the title suggests, today we are going to delve deeper into how trend following works. Now, as you know, big trend, you can make big bucks. Okay, in small trend, you can make small bucks. So if you want to make big buck in investing, trend following is the way to go. So yeah, welcome everybody to this session. So the fact that you commit to this session means that you're very serious to learn about trend following and also improve your return from investing. So without further ado, let me proceed to disclaimer. So whatever we share on this webinar is only for educational purpose. In no way that we give any recommendation to buy or sell any companies after this webinar. So whatever case study that we do on this session is only for educational purpose. Okay. So if you decide to make any investment decision after this webinar, you do it at your own risk. Okay. So you're 100% responsible for all your investment decisions. Now, allow me to introduce our guest speaker for this Can Trade webinar. All right. Now, he is a persistent trader in the capital market, focused on stock and futures. He's also the founder and chief master trainer of Street Finance. Now, his signature program is Street Trader Intensive Program, now allowing individuals to trade without monitoring and speculating in the market. Now, he is featured in media like City Plus FM, Borneo Post, Sinchu, etc. Now, he often speaks for Bursa Malaysia and also other investment banks on trend following these topics. And he's also a frequent speaker in universities and colleges. All right. So, are you guys ready for Jeen Hao? All right. If yes, type yes. Let me know if you are ready for Jeen Hao. All right. Cool. Thank you so much for your responses. All right. So without further ado, Jeen Hao, let me hand over the sessions to you.
All right. Thank you, Shane. Okay, so I should share my screen, is it?
Yes.
Okay. Share my screen. All right. So can you see my slide?
Yes. We're seeing
all right.
slide.
Great. Okay. Give me a while. Okay, so I see a lot of yeses in the chat box already. Thank you very much. All right, yeah. So welcome everyone to this webinar. First of all, thank you very much, for, Shane, and also thank you, Kenanga Investment Bank, for allowing me to share with you, about trend following. So this is a beginner-friendly webinar sessions whereby I'll share with you some of the basics that you need to know when you get into the trend following strategy. So if you don't know what's trend following strategy, it is basically a strategy that I primarily use in the capital market. Okay, so it works on any kind of financial instrument. So, but for today, particularly, we're going to talk about stocks. Okay, so we're going to talk about stocks, and let's again, whatever shares I mentioned later, there are no buy or sell calls. Just now we have already talked about the disclaimer. Okay, so content outline. These are the things that we are going to cover today. All right. So the first thing is we're going to talk about trend versus new, because oftentimes when it comes to trading in the market, a lot of people, they will always use things like news to support their decisions and things of that nature. So trend versus news, which one should you follow? We're going to give you an answer. Okay, so the next is what is trend and why you should trade with the trend. Okay, why you should trade with the trend. So the next thing we're going to talk about is how to analyze and follow trending sectors. How can you find trending sectors? Okay, so that is also another thing that we're going to cover for tonight. Okay, and last but not least, I'm going to share with you how can you structure a trading plan with the 4-step TEST process that I personally use until even today. Okay, so nothing is hidden. This is a process that we use to structure a trading plan. So you can take it as an idea at how we actually do everything, what's the process, and inserts your own bits that you like. Okay, so first one, trend versus news. Which one you should follow? Because oftentimes in the market, we have been seeing people asking questions like, oh, the company is releasing great results, giving dividends, seems like it's doing good. Will the share price go up? Okay. Then last time was like, wow, Trump tweeted this and that again. Wow, MCO again. Wow, this again, that again. Okay. This news, okay, is something that we get like too much, overwhelmed by news. So the question is, should we actually follow news from a practical standpoint and speaking from at least my experience? Okay. Should we follow news? Now, how would stock price react to news? This is a news release at the end of last month whereby Sapura Energy secures 6 oil and gas contracts worth 1 billion. And actually, there are a lot of people actually ask me whether or not Sapura Energy, this stock, can buy, because this stock has been really in a downtrend, and that time is what, only like 13 cents, 14 cents. Okay, so a lot of people are wondering, especially when these kind of cheap stocks, low price stocks are being are appearing in the headlines. So let's look at how the share price react to the news, because a lot of people might think that this is a good news. I'm not here to comment whether or not this is a good news or a bad news, because later I'll share with you why this doesn't matter at all. Okay, why this doesn't matter at all. So how would stock price react to news? So the next day, this is the exact screenshot that I took the next day. The share basically is going nowhere. And so meaning that a lot of people, they like to speculate news, or they like to buy things. Okay, they like to buy things after a news is announced. Okay, a lot of people like to behave like that. Now, I was just wondering, okay, let me know in the chat box, okay, how many of you, okay, you used to buy stocks before, okay, based on news, meaning that you see the news, okay, the company get contracts or the result is good, then you buy into the stocks, and at the end of the day, you don't make money following the news. If you have this experience, and if you're okay to share, okay, you have this experience, type me, M-E. Okay, type me, M-E, in the chat box. Let us know. Because I used to be like that as well. Then I ask, it is like every day I ask, hey, this company is good. Why I buy the stock just don't go up? Okay, and things of that nature. Hey, result good. Why the stock price not going up? Okay, so let I'll share with you why is that so. Okay, so as we can see from this case, okay, Sapura Energy, the share price is going nowhere. Now back then, there is also another company whereby they secured two projects. Okay, they secured two projects, and actually before securing the projects, okay, even before the news is being announced, okay, even before the news is being announced, the share price actually go up. Okay, the share price actually go up. So many people have been wondering what's happening with the company. Let me just wait. Okay, wipe the screen. Okay, so this is what happened. Okay, that stock used to be like, okay, going down, and then suddenly, out of nowhere, okay, the stock starts to trend upward. Okay, and people are wondering why the stock is going up. You see, in the market, people always like to find, okay, one thing, okay, is people are demanding what you call cause and effect. Cause and effect. Okay, meaning that when something happen, okay, when something happen, like a share price is going up, it must be a reason behind. And you will see sometimes some of the news, or some of the analysts, or some of the whatever, okay, even people like trainers who try to do live stream, okay, whenever there is a stock go up, they will do a live and explain why this share go up today, why this stock dropped today. Okay, they always talk about the stock only after. Okay, now let's go back to this example. Okay, so the share price actually go up, and a lot of people are wondering why. And at a point of time, they actually announced that. Okay, this company wants two contracts. Okay, worth, I forget the value. Okay, worth something. And then guess what? A lot of people went into chasing the news. The next day, basically the stock gap up by 10%. Okay, because many people are by, sorry, not 10%. The stock gap up by 4%. Okay, gap by 4%, and then it went down, giving you a bearish candle, a long bearish candle, and the drop is 10%. Okay, so why is this happening? Okay, why is this happening? I see from the chat box, price movement are controlled and played by syndicates. That may or may not be true, but later I'll give you an illustration why is this happening. So you see, let's go back to this one. If you follow news, okay, if you follow news, a lot of time you will realize that you don't make money. Okay, you don't make money, or it is quite tough to make money. It is quite tough to make money. Now, I want everyone, okay, everyone to participate in this throughout this webinar. Okay, so I'm going to ask you questions. So you give me the response by answering my questions. Type in the chat box. Okay, now type in the chat box. So let's say you, okay, you are one of the top management of a company. Okay, one of the top management of the company. So this company, okay, is called, maybe it is called ABC. This company is called ABC. Okay, now, because you are working at a top management, okay, so I'm not sure if you would agree, okay, even without looking at the quarterly result, for example, even without looking at the quarterly result, you may have an idea whether or not this quarter your company is going to do good or bad compared to the previous quarter. Okay, maybe based on okay, let's say you are working in ABC Apparels, okay, a listed company that sell clothes. Okay, so being a top management, do you agree that you can somehow know, even if you are not at a sales or marketing or account department, you are just, I don't know what position, but when the business is great, okay, you can see that the stores around Malaysia, for example, okay, things are selling out very fast, and each branch, okay, are ordering more inventories than usual, and the factory is already maxing out. For some reason, you can tell, okay, this quarter, okay, the result is going to be good. I don't know the numbers, but I know it is going to be great. If you agree that, okay, someone who is working in the company, for example, would know this piece of information beforehand. If you agree with this, type agree. Okay, type agree. Okay, type agree. Now, I see somebody say share price, okay, share price always go earlier than news and sell on news. Maybe you are correct half, okay? Another half later I'll share with you, okay? You see, a lot of people type agree. So let me ask you the second question. If you are the person who is in this position right now, in the shoe, you know that your company is going to do good in the next quarter, and the result is going to announce in a month or two. Announce as in the public will know, okay? It will be publicized, okay? What would you do? Can you comment? What would you do? Okay, what would you do? Comment in the chat box. Okay, so you know that next quarter is going to be great. Confirm great. Okay, no need to see the report. I also know. Okay, so you can see a lot of people say buy more shares. Buy. Okay, buy. Okay, it seems like, okay, it seems like a very logical move. Okay, it seems like a very logical move. Okay. After you buy, what you do, you ask your girlfriend to buy. You ask your father to buy. Ask your mother to buy. Okay. Ask your mother's friend to buy. Okay. So what happened is when a lot of people buy, and I'm very sure if you are in this position, you're not going to buy only a little. You're going to buy a lot. Okay. You're going to buy a lot. Okay. So it will actually, okay, in the real market, the share price would go up. And then you have a bunch of retailers. You have a bunch of retailers asking why this stock is going up. You see, when I share with you guys, okay, the upper part, which is what's happening in the company, okay. Now, right now, I share with you what's happening in the retail market. This is what you always see. A stock price go up, people ask why. And why this stock go up? And why that stock go down? Okay, so again, okay, back to this one. Now, let's say the result finally announced. Okay, finally announced. Okay, the quarterly result. Okay, it is up by 50%. Good news. Okay, let me just right off the bat tell you. Some people might say you will sell. Some people might say you will sell. let me tell you the reality. Okay, let me tell you the reality. If you think that your company, okay, the company that you're working at has the potential to go up further, meaning that you know that the following quarter is going to be better than this quarter, most probably you're not going to sell. Probably you're not going to sell. Okay. Will you agree? If you agree, type one, type number one. Okay. You would not sell, at least you would not sell all, okay, on news. So the share price would go up and the news announced, retailers will chase in and it might go up again. This is provided the company is deemed to be good. Okay, meaning that people, the big players, it might be people inside the company, it might be the fund houses, it might be the institution. If they think that it is good and there are things that are way better ahead, they would not sell, or at least they would not sell all. Now, if you think that, okay, this my company lousy one, this contract no use one, okay, it's not making money one. People just want to goreng the news. So what you will do when the stock go up, okay, when the news announce, you sell, okay, you sell, retailer chest in, and then the stock go down because the insider think that it's enough. There is no more story to tell. I'm gonna sell. So this is what happened when you see sell on news. So it is not necessary that always, okay, people will sell on news, but there are certain scenarios whereby people might sell on news. So again, there is no way to tell, okay, there is no way to tell whether or not there is people are going to sell on news or what. Okay, so that's why what I suggest is don't look at news. Okay, later I'll tell you why. Now, for the case of this, back to this one, for the case of Sapura Energy, you see, looking at the trend, it is in a long-term downtrend. Okay, long-term downtrend. As you can see, let me draw. Okay, as you can see, long-term downtrend. Wait. Okay, long-term downtrend. However, since maybe from October or November until April, you can see that it started to go up a little bit. Okay, it started to go up a little bit. However, okay, if you chase the news right until now, you still don't make money. But I'm not sure if people who may know that they are getting the contract, okay, people who have this piece of news beforehand, are they buying? Okay. Now, if you realize a lot of times, okay, a lot of times as well, when it comes to quarterly result, okay, good quarterly result always come later. The share price will go up first. Okay. If you have encountered this before, okay, type QR. Okay. I repeat. Okay. Good QR always announced later. The share price usually go first. Okay, this is very simple. It is just the exact illustration that I shared with you just now. Okay, it is the exact illustration that I'm going to I shared with you just now. Okay, so you see, this is glove. Okay, this is glove, top glove particularly. So you see, top glove result is very good ever since. Okay, ever since. Actually, this is quarter for February and then May. Okay, it has been soaring. It has been going up. Okay. However, does it mean that when the QOQ and YOY is improving at a 4-digit manner, does that mean that the share price is going up? Okay. Actually, during that time, which is this period of time, okay, when the result looks super good, the game is already over. Okay, the game is already over. All right. So if you need some proof, let me just share with you. So the dotted lines are basically earnings release. So you can see, beginning of MCO, Top Glove actually started to go up. And that is exactly when we started to buy. Okay. Because we follow the trend. And after that, good results announced, it continued to go up. Maybe those big players are still optimistic about the glove or whatever thing. Okay, we never know. Okay, we never know. So after that, the share price go all the way up, and then during this quarter, it retraced a bit and keep going up. But after that, you can see I think this one is September release. It went up by QOQ 271%, but the share price seems like go up a while, then it lost momentum. And on November, December release, this December release, it went up by 84%, YOY 2000. The share prices is like, I don't give a damn anymore. Okay, so if you follow trend, you should be getting out right here. Okay, and you wouldn't stuck until now. Okay, you wouldn't stuck until now. So result, stock price, is totally two things. A lot of people like to think that there are some kind of relationship when it comes to good results must give good must yield good share price movement. It's actually no. Some people say oil price go up, oil and gas price oil price go up, oil and gas stock will go up as well. Okay, now oil price since the bottom of last year, whereby the oil futures dropped below zero, until right now the oil is like around $60 already. It is an uptrend, but most of the oil and gas stocks in Malaysia, at least, they are not doing really that well. Another example, FCPO prices has been in a really good uptrend since last year. But you look at the plantation stocks around Malaysia, you find it tough to make money. Okay, so there are also some things to consider as well. The first things, let me just share with you, news doesn't matter. Okay, news doesn't matter. Now, you might think that a news is good, okay, but some other people might think that it is not good. Okay, and will the market move based on your opinion or their opinions? It depends how big capital you have. Okay, of course, today you are big players, your opinion will have a louder voice, but we are just retailers. Okay, we are just retailers. We cannot move the market. Okay, other people move the market for us. Okay? So news doesn't matter. Seriously, news doesn't matter. It's how people react to the news matter. Okay, news doesn't matter. It can be a good news, but some people might think that it is not good enough. Like for example, they think that Top Glove should have made 3 billions in a quarter, not 2 billion. Okay, although making 2 billion in a quarter is good. Okay, but maybe some people think that it is not good enough, so they react differently. Or some people might think that, okay, this might be the top already, I'm gonna sell. Okay, then they react differently. So news doesn't matter, it's how people react to the news. It is like sometimes, there's some news like a factory is on fire. Some people might be very pessimistic. Okay, but some people think, never mind. Okay, insurance will pay. Okay, so people might react differently because people have different point of view. Okay, so however, there are no ways to know how each and every player in the market think about the news. Okay, there are no ways to know how each and every player in the market think about the news. It cannot be like today there's a news release or a quarterly result release. I go and ask every market players, hey, how do you think about the news? How do you think about this kind? How do you think? You cannot collect this data. You cannot collect this data. So therefore, everything is just a guess. Okay, like for example, I see the comment, results beyond expectation will boost what? Boost mindset. Okay, I'm not sure. Okay, but some people might think that results beyond expectation when there is an earnings surprise. Okay, it might push up the share price. Well, this is just a guess because you never know what's happening at another side. Okay, so everything is just a guess. Okay, so people's expectation also need to be factored in. Okay, and also people's expectation, if you learn technical analysis, okay, the price has already factored in all the known facts, fundamentals, news, and also people's expectation towards the company. Okay, so when people expect this company to make 1 million of profits, so before the QR even happened, people already buy into the stock expecting this company to perform at 1 million profit. So if the result come out, it makes 1 million, it means that it's already expected. So the share price may or may not move. Okay. If there's an earning surprise, maybe. And also people's expectation, you cannot get the aggregate markets, people's expectation. You might expect it to make 1.5 billion. But the fund managers, they sit together in a coffee shop, they all think that it should make 1.8 million or they should make 1.2 million. Okay, so again, it is a data that you can never validate. Okay, so also consider insiders movement. Okay, consider insiders movement, and regardless what's happening, okay, syndicate lah, insider lah, or fund buy up lah, institution buy, okay, big buyers and sellers always leave footprints in the market, which is price and volume. So that's why in my entire journey in the market, I would say, okay, technical analysis made me the most money because they always leave footprint. I don't have to analyze too many things. When a hot money go in, when there is a trend, price and volume confirms it, is when I will usually get into the market. And technical analysis assumes that all fundamentals are already factored into the price. So these are the things that, okay, we got to know. Okay, we got to consider. Okay, so far, if you have been learning something, type yes in the chat box. Okay. Now, next thing, we're going to share with you what is a trend and why you should trade with the trend. Okay. So do you ever encounter this situation? Okay, do you ever encounter this situation? Maybe share with us. Okay. So you look at a stock. Okay. The stock price has been dropping and dropping and it looks cheap. You buy the stock. However, the stock just become cheaper and cheaper. Okay. If you have this, you encountered this situation before, type C. C stands for cheaper. Okay. If you encountered this before, C stands for cheaper. Okay. So the next situation, you look at the stock. The stock price has been going up. You feel like it is very expensive. Okay. You feel like it's very expensive and you feel like you are late for the party. You end up not buying it. However, the stock price just moves higher and higher and higher, and you always feel like last week or last month was the best time to buy. Okay. If you have this situation before, type up. Okay. UP, up. Okay. So here's the thing. If you really go and study statistically, okay, if you really go and study statistically, whatever it is going up, probability-wise, it will go up higher and higher, probability-wise. It might have a retracement because an uptrend doesn't go up in a straight line anyway. Okay? But it tends to go up until the trend bends at the top. Okay. And whatever that is going down that appears to be cheap, a lot of time they will just go cheap, become cheaper, or there is just not enough, no movement on the stocks. Okay. So imagine technology stocks last year. Imagine glove stocks last year, those who joined in late. Imagine the steel counter in Malaysia. Okay. So And also you can imagine even things like Bitcoin. It is a trend. Okay. It always go expensive, 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 expensive. Okay. Things like that. Okay. But anyway, this no buy or sell calls. Okay. It is just purely educational purpose. So take some of the stocks to study. Okay. Whether you trade Malaysia or trade Singapore or trade US, I want you guys to list down maybe 10 stocks that are uptrending and 10 stocks that are downtrending. And after 1 month and after 3 months, you're going to look at them. How many of the uptrending stocks continue to go higher and how many of the downtrending stocks do rebound and recover and give you some money. Okay. So follow the trend, follow the smart money. So the core belief of trend following is actually the trend is more likely to continue rather than reverse. Okay. An uptrend has a higher probability to go up and a downtrend has a higher probability to go down. So trend traders and trend followers will always looking into going long in an uptrend. So if you don't know what's going long, it means that you buy first, you buy low and sell high, you buy and sell later. Okay. Or looking into going short in a downtrend, meaning that you sell first and buy back later. You anticipate the share price to go down, so you go short. So for stocks, I don't do short sellings. Okay. For short, for stocks, I don't do short selling. Okay. So I only go long. Yeah, I only go long. So this is basically my personal practice. Okay. So few example. This is a DNO. Okay. How do you look at uptrend? I know that recently technology stocks turned down. Okay. Later I'll share with you a little bit. Okay. So how do you identify uptrend? So when the share basically every month it consistently break new high. So in November, you can see this stock, November, it went up by around 1 to like how much is here? 130, 150. And after that, it retraced a bit and break new high December as well. January, it break new high. February, break new high. March, break new high. April, retrace. And eventually, okay, March retrace and April break new high again. Recently, it turned down. Okay, but if these kind of uptrending stocks were to recover again, it is something that you must watch. So a lot of people tell me last time they buy, okay, because I don't buy DNO when it is like 80 cents or $1 or $2. Okay, although I have students whereby they enter at 1 plus. Okay, I personally enter at 2 plus, and after that it went up as well. Okay, because I follow the trend. I follow the trend. So there are going to be retracement in the middle. So what we do is basically, if you have enough unrealized gain, maybe you sell a little bit first and see whether or not it will recover later. Okay, will it become a downtrend? And if it doesn't, okay, then you continue to hold. Okay, so this is an example of an uptrend. Okay, so next is Anju. Okay, next is Anju. So December, it went up a bit. Okay, and after that, January, it retraced and goes sideways. But if you look at the share, only from this manner, okay, you imagine you are at this point of time, it is going uptrend and then go sideways a little bit. Okay, and go sideways a little bit. Okay, so you see the stock can go up from like 60 over cent to 150. Many people would think that it is expensive. However, for trend followers, we see trend. So when it breaks out, when it break out and sort of like forms a new wave, a new momentum, a new high, is when we can start accumulating and start buying. Here is the same thing. Okay, so this is basically how we look at it. Okay, when the uptrend has, after resting, okay, the stock go up, rest a while, and it continue to go up, is when we can start buying again. Okay, so when it is resting, go up, we can start buying again. Okay, so this is how we look at it. Okay, only when it's at the top and it starts to turn down like this, okay, like how the gloves behaves last year, then we start selling. Okay, now this method is not meant to be short term. It's not meant for you to speculate. It is, I would say, among all the trading methods, okay, among all the trading methods, this is the most boring one. I would just say this is the most boring one. Okay. But again, over the long run, this method, okay, is very profitable because you ride the big trend, and also over the long run, you pay. Probably investment banks are not going to happy if I say this, but I have to tell you that's the advantage of trend following. Okay. Over the long run, because you are not trading very frequently, over the long run, you're going to pay less brokerage fee. Okay. Is that a good thing? I don't know about you, but I think it's a good thing, at least for me. Okay. So it is not a high frequency trading kind of method. Okay. It's not a high frequency trading kind of method. So again, this is the most boring one. But again, are you in the market for profit? Okay. Or are you in the market for excitement? Type in the chat box. Okay. Because some people tell me, by the way, I'm going to be honest with you. Right now, the market is boring. The market, most of the stock has no trend. It is not like last year whereby glove and technology counters, okay, are very, very uptrend. Right now, if you are trading in Malaysia, the choices of uptrend stocks are very limited. Okay, very limited. If you are trading already, you know what I'm talking about. It's very limited. So this kind of scenario is like very boring. You don't have a lot of candidates to trade. But again, some people, okay, I say if you cannot find a good stock to buy, a good setup, you might as well don't buy first. You wait for opportunity. I don't know why, but it seems like it is a tough thing when somebody has money sitting inside the trading account is not using it. Okay. When the market is not good, they know since February, March, April until now, market is not so good. I say trade less aggressively because there's just not a lot of trading opportunity, but there's still trading opportunity per se. Just that don't overly aggressive. Leave some money in your account. Don't trade overly aggressive. But there are always people, whenever they have money inside the trading account, they become very itchy. Okay. So when there is no trend, basically, I don't trade a lot. Okay. I don't force myself to trade. I don't trade for the sake of trading. Okay. So now, some people type, how to determine a trending period? Chill. This is what I'm going to share with you right now. Okay. How to analyze and follow trending sectors. Okay. How to analyze and follow trending sectors. I'm going to give you a few examples. Okay. I'm going to give you a few examples. And of course, I will give you the examples right now, based on the current market situation. But you take these methods and strategy and you're going to apply next time when the trending sectors are going to be different. Okay, so you're going to look at a few things. The first thing is you're going to look at US, the Dow, you look at the S&P 500, and you look at the NASDAQ. Now, the DJI usually represents the big super mega cap in US and also the traditional sectors, because in DJI, most of the candidates are those traditional sectors. Okay. Now, in S&P 500, it usually represents, okay, it usually represents the overall market scenario, sentiment, because it is an index that includes 500 shares in the US market. So overall sentiment is based on this S&P 500. Now, the NASDAQ is an exchange whereby about 48% of the stocks listed inside NASDAQ are technology stocks. So you can see recently, NASDAQ is not doing that well compared to last year. So last year, when NASDAQ is doing well, technology sectors is good. And right now, you can see that NASDAQ is not that good compared to S&P 500, because last year, NASDAQ outperformed S&P 500. But right now, that's not the case. Okay, it is underperforming. So it hints that technology sector may not be doing that good. Okay, so these are the things that you can look at. So right now, we can see that S&P 500 is trading at all-time high region, whereby NASDAQ just break all-time high, but it's just retracing. So it is weaker. If you look at the chart, they are going to be weaker. Okay, so Next is you're going to look at sector index. Okay, you're going to look at sectors index. In Malaysia, okay, you're going to look at sector index. For me, I don't look at the KLCI because KLCI is often not a good indication of where our market is heading. Because you look at our CI, our KLCI is like you have all the banks. Okay, you know that all the banks are not performing since like many years ago. You have all the stocks that are in a monopoly or oligopoly business, and those business, when you're in a monopoly business, it's hard to improve. Okay, because you got no competitors in the market. Okay, so KLCI has a lot of these companies, and that's why it is not a good indication because these companies, they are technically speaking, if you understand business cycles, they are in a matured or declining stage. They are not in a growth. Okay, so for me, I look at sector indices, which I'll be sharing with you later. And also the next thing, stocks move in groups. Most of the time, stocks move in groups. But if you happen to see an uptrending stocks, that is like, maybe I give you an example, maybe like Pekka last time. Okay. It is doing all those like leather upholsteries that is for your cars. Okay. Basically, there's no team when it comes to this. Unlike technology, unlike steels, unlike glove, unlike export sectors, unlike plastic packaging, there's no team. But when a stock is good, it's also okay. But you got to pay more attention on stocks that are moving in groups. So maybe you can share in the chat box, what are the sectors or subsectors, okay, whereby the stocks are moving in groups, okay? Maybe you can share in the chat box with everyone. Okay, now, let me just give you an example. This is technologies index, sector index in Malaysia. So you can see that since last year, actually the most profitable sector last year is not glove. It's not glove. It's actually technology. But recently, since March, it went down and then it goes sideways. And right now, it turned down again. Okay, this is not the latest one, but right now it is getting weaker. So we get a kind of like topish things, okay, for technology sector. So it means that this sector might be weak. Okay, but one thing that you have to remember is the primary trend. What is a primary trend? Maybe you look at half year to 1 year or 2 year, the chart looks like this. This is the primary trend. Okay, this is the primary trend. So if the chart, the price is still trading somewhere at these levels, even if it is dropping, okay, if it happened to go up, it would still be good. Okay, because the primary trend is still up. Because trend, we have primary, we have secondary, we have minor. Okay, primary trend is this. Okay, so primary trend, you look at the whole chart. Okay, you look at the whole chart. What trend is this? Primary trend. What trend is this? Can everyone type up, down, or sideways? Okay, primary trend. So up, up, up. Okay, so now if we look at the midterm or the secondary trend, what do we see right here? Secondary trend, right? What do we see right here? Up, down, or side? So a lot of people say sideways. So what does a sideways mean? Sideways means the stock is going nowhere and it is waiting to choose a direction. If you choose to go up, it will be in an uptrend. If you choose to go down, it will be in a downtrend, meaning that it is indecisive. Okay, so this is the secondary trend of this technology sector right now. So this is primary trend and there is secondary trend. So for minor trend, I don't really care. Okay, so yeah, some people say consolidate. Yeah, consolidations, it means a little bit of sideways. Okay, now the next indices we're going to look at is industrial product. So industrial product, there are a lot of things inside, and particularly this one, definitely it is in an uptrend. Okay, it is in an uptrend. Primary trend is in an uptrend, secondary trend is also in an uptrend. Okay, so what is the subsector inside industrial product? And some of you already mentioned just now, it is steel. Okay, so what are the things that are in a steel sector? Okay, Anju, this is an example of uptrend. Okay, so as example of uptrend. So These stocks move in group. That's why we have to put more focus in this. Like for example, CSC Steel. Okay, CSC Steel. Okay, now I want to comment a little bit about this. Okay, way too many people give up shares too fast. Okay, now for example, the stock go up here, okay, and it starts to retrace and go up, go down. Imagine you don't see this part. Imagine you don't see this part. You only see this part. A lot of people say, this stock, game over. Okay. I would say way too many people conclude a stock is dying or a sector is dying way too fast. Okay. Now, it is true that if you are in the share, let's say you buy right here, if it turns down like this, you're going to sell. Maybe this is a break-even trade or maybe lose a little bit of money. But again, the primary trend is still up, just that in the middle, there is a secondary trend, which is a downtrend. Once this is cleared and the uptrend resumes, you can buy back. You can buy back and you still can have the opportunity, okay, to profit. Okay. Don't pak tall, okay? You're not dating a stock. Okay. We are here to see things in a very technical manner. Okay. It is uptrend, but if it hits some kind of stop loss, I get away first. In case the stock, okay, why should I get away first? In case the stock go down and never come back. So I sell first if it turns weak. But if it goes up later, I can buy back. Okay, a lot of people say technology stocks right now is weak. But again, if you look at technology stocks, most of them, primary trend is still up, only secondary trend is down. Okay, so again, we can just position out first in case it drops further. But what if, a lot of people say, if I sell the stock, what if it go up? Okay, let me just share with you. If the stock is going down, you have two options. Okay, you sell or you don't sell. Okay, let me just share with you. If you sell and the stock, okay, if you sell and the stock go up later, you can always buy back. Okay, you can always buy back. Okay, you wouldn't always date your ex back, but you can always buy back a share. Okay, now if you sell and the share price keep dropping, it is none of your business anymore. Okay, now what if the share drops and you don't sell? Okay, if the share continue to go down, okay, you are stuck. Okay, I know recently there are a very in the stock trading space, there are people are saying, okay, stay in condo. Okay, meaning that you stay at a very high price, you're stuck at a high price. Okay, now if you don't sell and the share price go up, you break even. That's it. It takes a long time to break even. Okay, so if a share were to go down, sell first. If you feel uncomfortable to swallow the kind of retracement, sell first. Okay, and take a step back and see whether or not, okay, it can recover. All right, so this is what we can learn from stocks like CSC Steel and also Anju previously, and also a lot of stocks basically. Okay, now this is also another stock called Presta. Okay, it is in the steel sector. Okay, it is in the steel sector. So it go up, okay, go sideways and break out again. Okay, so Hyaptech, same thing in the same sector. So again, if somebody were to look at the chart up until here, some people will say, yeah, goreng game over lah. Okay, but it slowly go up after that. Okay, so you can again reposition into the stock a little bit by a little bit, not to ask you silang, okay, not to ask you all in, okay, but you can buy back a little bit. If you feel uncomfortable with the kind of pattern, you feel like, hey, will this stock have a pump again? Okay, like syndicate is goreng. If you have a concern, don't buy. You have other steel stocks, okay, in the sector. All right. So This is how basically you find trending sectors and stocks in the market. Okay, you focus on sector indices, look at current market situation. Okay, so next, once you find the stocks that is trending up and you want to buy, okay, you got to structure a trading plan. Okay, so to structure a trading plan, we use this 4-step TEST process to guide us. So what is this TEST? TEST, the first step is trend. Okay, the first step is trend. So basically, what does a trend mean? Trends means you're going to find an uptrending stocks. Okay, you're going to find uptrending stocks. Now, the next thing is we're going to find entry. So how do we find entry? Let me explain very quickly. An uptrend does not go up in a straight line. Okay, an uptrend does not go up in a straight line. So it will go up and retrace a little bit and go up and retrace and recover, continue rally, retrace and go up. So what we want to do is, a lot of people might say, okay, Lord, I give you a very quick overview. Okay, I give you a very quick overview how a stock can behave. Okay, now you see, uptrend doesn't go up in a straight line. It will go by waves. Okay, so what we're gonna do is, okay, we buy when the stock turn around. Okay, we buy after it turn around. Okay, like somewhere around here, meaning that the stock go up, has a pullback, and then it rebounds. Some people might say, you see, when I buy the stock, why don't I wait the stock to go down and I buy here? Down is cheap. Now you're going to remember, you never know where this retracement will land on. It might go up. It might go down further and go up. It might turn into a downtrend. So, as if you have heard the terms before, higher high, higher low. Basically, in an uptrend, the previous high must be higher than, and the current high must be higher than the previous high, and the current low must be higher than the previous low. So a rebound above, okay, let's say you see a stock go up, come down, go up, come down, and turn around. When you see this place is formed as a low, if you can see that it's a higher low, basically this rebound is a good rebound to buy. You can enter somewhere here and you set a stop loss below the previous low. So why do we set below the previous low? It is because if this stock were to, after you buy, if this stock were to go down and hit your stop loss levels, okay, you're going to sell it. Why do we put below? We basically put at the levels whereby you look at the chart, it's no longer a good uptrend. Okay, you look at the chart, it's no longer a good uptrend because it forms what we call a lower low. Okay, so another way of buying is actually buying a breakout. Okay, so the stock go up, come down, go up, or consolidate a little bit and then poop, go up again. So what you can do is you buy when it breaks a new high. It breaks a new high and you set a stop loss like maybe around 8 to 10%. Okay, you put a stop loss down there. This is basically what we often do. Okay, now of course you can further precise your entry and stop loss. Okay, but our time is very limited. So first step is trend. Next, you look for entry. And when you have entry, you must have stop loss. So what is stop loss? Stop loss basically is something that prevents you from further losses. Okay, prevent you from further losses. Okay, so we already explained just now why is it very important. Okay, if the stock go down, you sell or don't sell, what are the consequences? Okay, next we want to talk about what is trailing stop, or you can take profit. Okay, so this one is a very common thing for trend followers, but it might sound foreign to a lot of people. So when the stock go up, let's say you buy here, when the stock turn around, set a stop loss down there. Let's say it forms the low at $3, you set a stop loss at maybe 290 and you buy at maybe like 315. Okay. Now when the stock go up and up and up and up until maybe like here, okay, when the stock at this point is already like 380, okay, you cannot use these levels as a stop loss anymore. Okay, so what you're going to do is you move your stop loss upward. You reference this low, okay? You move your stop loss upward. So for example, you might want to put a stop loss at below the, maybe this low is like 350. So maybe you put at like maybe 345, 340. Okay. And then you go all the way up, up and up and up. So this is basically how we can write a big trend. This is basically how we can write a big trend. Okay. So right now, the market has maybe not too much trend just yet. But if the market were to turn better, okay, focus on what I shared with you just now. Okay. Find the trending sectors and stocks. And then after that, we'll look at it again. Okay. Which one is the one going up? And if you buy and it happens to go up, then you just trail all the way up. Okay. So just to give you some example, So for example, this stock, okay, basically this stock is uptrend, okay, uptrend. And you can see that, for example, this is a higher high, this is a higher low. And you can see the stock basically turn up. What you can do is you buy on when it rebound, you buy here, you set a stop loss here. And when the stock go up, okay, turn down, go up, come down and turn around, you have a reference for low, you put a trailing stop down here to move your stops upward. Okay, so the stock go up, come down, it doesn't hit your trailing stop and then go up again. So this is basically how we look at it. Okay, so after that, the stock go up, come down, and boom, it breaks the previous low. Is your decision whether you want to sell. Okay, now next, let's look at P metal. Okay, P metal. Okay, so P metal still holding this stock. Okay, so what you can see right here is P metal. It has been an uptrend as well. Okay, it has been an uptrend as well. And right now it's still in an uptrend. Just that maybe there's not much movement. Okay, so you see it go up, turn down a bit, go up, turn down a bit, go up. So you can actually buy here, set a stop loss here. Go up, go sideways, put a stop loss down here, go up, turn down, go up, turn down. If you put a stop loss here, you might get stop up here. It's okay. You can always buy back. So here you can see that it's kind of like break a resistance. You can buy back here again. So here, same thing. It breaks a new resistance. You might want to buy back here again. You put a stop loss down there. Okay. So this is basically how, in general, okay, how do we plot our entries and how do we structure the whole trading plan. So you look at the trend first and then you wait for an entry. But by the way, if you look at the stock right now, the stock is shooting up. Don't buy first, because the previous law is probably going to be very far away from where you want to enter. Okay, so that's why, okay, you wait until it retraces. So let's say you look at the stock is skyrocket now. Don't buy. You wait until it turns down and go up again, you buy. Then you have a better place for you to reference. Okay, so that is basically, okay, some of the information and knowledge that I can share with you. These are what I practice. Okay, but right now, as a reminder, Malaysia market is not as interesting right now. Okay, so you might want to trade less aggressive and pay attention on what are the stocks that are going to move in a group. Okay, so if you are holding some stocks that are moving in a group, like for example, in the steel sector, okay, keep holding and move your stop loss upward and trail all the way up. Okay, so I think that would be the presentation, and I will hand over back to Shane.
Thank you so much, Jeen Hao, for very wonderful sessions on trend following. So we all are. So right now, I guess most of us here have known how to discern between news or choosing between trends. Okay. So if you have any questions for Jeen Hao, please write in the Q&A box. Not the chat box, because we can easily manage your questions. So write your questions, your burning question, in the Q&A box, not the chat box, so that we're able to manage your questions effectively. And remember to write your questions in full sentences so we are able to understand your questions. We have a few hundred of you on the line right now. So if your question is very short and we can't understand, so we will skip your questions. All right. Yeni would like to ask you, Jin Hao. My friend tell me that follow EPF to buy share can earn money. Can you verify this matter?
Actually, this one, you try a few times, then you know. Lah. You don't have to try with your own money. Lah. You pepper trade it. What I can share with you is this. From what I know, okay, I'm not sure if it is right or wrong, but EPF is sometimes they are inside to stabilize the market. Sometimes they make money, sometimes they don't. So EPF, okay, is not an indication whereby we should buy or sell the stock. All right. So this is what I can share with you. Lah. Okay. It's not an indication.
Okay. David would like to ask you this question. With the current news that the US may have to raise the interest rate as mentioned by the Department of Treasury, so how should we react to the news in managing our portfolio that involves stock that was still uptrending before the news?
Move your trailing stock upward. If the stock is going to retrace and went into a downtrend, meaning that it may be affected by the news, or it may be it may or may not be affected by the news, but if it happens to affect by the news or any other external factor, you have your trailing stop there to protect you. Now, trailing stop basically helps you to guide you. Okay, it's something that guide you to exit the market when things are not doing well. So actually, I don't care whether it's an interest rate. I don't care what's the news. Basically, I move my trailing stop up. Okay, there are actually some US stocks that are doing really well. Okay, so you're gonna protect the profit.
Okay, trading stop that you have just mentioned just now. Now, B Ping would like to ask, how do we define secondary trend and minor trend? Now, assuming that primary trend is the trend for the past 1 year, how about secondary trend and minor trend?
Now, I would say that minor trend is something that I wouldn't care. It usually only affects like those scalper and day traders. But for secondary trend, now there is no definite answer. Okay, there is no definite answer, but I can say it would be somewhere in between 2 weeks to 1 or 2 months. Okay, be somewhere between 2 weeks or 1 or 2 months. Usually, how long is your holding period? That might be a time frame that you should benchmark for secondary trend. For example, I hold a stocks, usually I can hold 2 to 3 months. So for me, 2 to 3 months could be my the time frame for me to see the secondary trend, because a lot of time we are affected by secondary trend, not the primary trend. Like for example, some of the stocks are still, primary trend is still up, but we are being washed out by the market. So it is because the secondary trend is not doing well. Okay, so back to how long do you usually hold a stock? Usually I would say it's like 2 weeks to about 1 to 2 months. Okay.
Okay. The second question is, when we pick the entry, you were saying that wait for the rebound from a higher low point. So is it based on the closing price of the day? If it shows rebound, then it is time to enter. Or during the day, as long as the price is higher than the previous low, then it is considered a rebound and can enter. So this is a follow-up question by B Ping.
Okay. Let me maybe I explain this way. Can I still share screen?
Yes, you may.
Okay. I think this one better. I have something to share. Okay. All right. So share screen. Okay. So let's say you identify an uptrending stock. Okay. It went all the way to maybe $50, and it comes back down to maybe like 45.70. Okay. Now, depending on this wave, okay, I would say depending on this wave, Then you decide how much rebound is considered significant, because we have to use a little bit of like rational thinking. If a stock go up from here to this high, let's say you have a stock here is $2 and here is $6, and it crash all the way to 3, okay, and then go up to 310. I wouldn't call this a rebound. Okay, the rebound has to be ideally at least like 50% of the corrective wave. Okay, of the corrective wave. All right. So you see, let's say this back to this example. Okay, back to this example. So 45.70. So the thing is, if the stock go up, if the stock go up today and it go to like 46, okay, you might want to set based on what strategy you use. Okay, maybe you set a price here. Let's say it is like $47 you want to buy. Okay, so what you can do is you depends on whether or not you have the habit of relying on live data or end of day data. Because if you rely on end of day data, meaning that you don't monitor market most of the time, then actually you can wait until the candles close. Sometimes you might be late. Okay, sometimes you might be catching it a little bit early. Okay, so you just set a price, like for example 47. What you can do is this: if it is a Malaysia stocks, what you can do is Kenanga has an app called Invest. Invest, INVESK. You can put the price as a trigger. So meaning that when you are working, okay, you don't you focus on your work. But let's say if this stock really hit 47 ringgit, you will get a notification by the app because you set a trigger. So what you do is maybe only you log into a platform and see and decide whether this rebound is good, whether the volume is good, okay? And then you decide whether or not you want to buy. And everything is predetermined because you already know that previous high is 50. You already know that if this were to rebound successfully to 47, previous low is 45.70. So you already know that your stop loss is at what level. Okay, so these are the homeworks that you're gonna do. Okay, I would say this is homework. All right, so I hope this answer your questions. Okay.
Okay, yeah. Peter Chin would like to ask this question. In setting a trailing stop, should it be a limit price or a market price? There are rare cases where price plunge below the stop loss or price.
Okay. If your trailing stop is hit, I would suggest to sell at the market. Unless you want to keep, because when you say about limit price, it means that when you want to sell, you still want to try to sell a little bit higher. Unless you have the time to go and monitor the queues and all those things. If not, then I would just say that usually I would just sell right off the bat. Okay, at market price. If the trailing stop already hit. Okay.
Okay. Charlie Yi would like to ask, how do we know when an uptrend starts? Do we buy at the start of an uptrend or mid of a trend?
Okay. Usually when a stock recover from a downtrend, I want to see how downtrend it was. Okay, how downtrend it was. Has it been down for like 2 years? Okay. Or has it been down for like only 3 months? Okay. So these two, the situation might be different. But the general rule is the first criteria is to break 1 month high. The bare minimum is to break 1 month high. After breaking 1 month high, I want it to form another, at least one more wave of higher high and higher low. You might want to use some of the indicators or things that you might be very familiar with, like EMA and things like that. If after breaking 1 month high, it is going up and retracing, maybe it hits certain EMA that you are familiar with, like maybe 30, 25, 20, okay, and then it rebounds or any kind of support, it hits a support and go up, then you can start buying. But when you are buying in the beginning of the uptrend, my suggestion is you buy slowly, because a trend might anytime fell. Because don't forget, a lot of time when you are buying the beginning of the uptrend or once the stock is turning up, don't forget, okay? Let me share my screen again. Okay. 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 So when you are buying, oops, okay, a beginning of an uptrend, most probably what you are talking about is this stock has been in a downtrend and it go up. Don't forget, this kind of scenario, primary trend is still down, secondary trend is up. The risk is still a little bit high. So when you buy, let's say the first criteria hit, it breaks 1 month high. You buy half position. Okay. If it forms a new higher high and higher low, like after that, after one more wave, two more waves, okay, maybe you buy another half. The pattern that I like the most is stocks that are trading at all-time high. Okay, stocks that are trading at all-time. This is my personal favorite, or at least 52 weeks high. Stocks that usually people don't dare to buy. Okay, stocks that usually people don't dare to buy. So let me share with you this stock. Okay, this stock is LE Financial. So basically, finance stock in US, okay, was very good. Okay, so you see, you look at this chart, most people may not dare to buy beginning of 2021. But what I see is basically the stock is keep trending up, trending up, trending up. So what I do is, okay, not a buy call, although I'm holding this stock. Okay, so what I do is when it turn up, I buy here. I set a stop loss down there and it go up like this. I move my trailing stop upward. And right now it is still going up. This is basically how I set up my plan. Okay. Personally, I prefer stocks that are at an all-time high. Right.
Okay. The next question is Chin Fan would like to ask, like, how useful are moving averages and what kind of trading ranges averages that you use?
It depends. For me, moving averages are just like eights. Okay, they are just like eight things that guide you a little bit. The primary trend and the trend itself, the price action is still very important. For me, I don't need indicator. I also can trade. Okay, so basically, how useful is moving average? I would just say indicators only occupied like 10 to 20% out of your whole strategy. The rest is still stock selections based on sectors and based on the trend itself, and also how do you position into the stock. So how useful it is, I would just say you probably can live without it, but sometimes it can be a little bit useful. Like for example, some people like to buy like 5 cross 20, which I don't. Okay. You might want to back test based on what stock you trade and what is your time frame. Yeah, some people use it in hourly chart and find it very useful. But for me, I can live without it. Sometimes I just use 20 moving average to guide me as a 20-day sort of like average, means 1 month average. Okay. And I use 50 average to guide me based on that is my like 1 quarter, sort of like 60 days, 1 quarter's average. Okay. So meaning that if a stock go below 20 days average, it means that people who bought in the last 1 month probably don't make money. Okay. So it means that selling pressures might become stronger and stronger, things like that. Okay. So how useful it is, I would just say that if you look at the price, it starts turning down. I think this information sometimes is more than enough. All right.
All right. Boon Ping would like to ask, like, what periods would you use to watch the trend of the stock? Is it the weekly chart, daily chart, monthly chart, or even hourly charts?
Okay. For me, basically, I rely mostly on daily chart. I look at least 1 year. I will look at as far as I can. Okay. But minimum, I'll just say is 1 year, unless it is a new IPO stocks. Okay. that like Mr. DIY, some Iden or some Iden, those stocks, okay? Then you look at as long as you can, okay? So basically for stocks like normal stocks, okay, like your glove, like those some of the good old stocks, okay, at least 1 year, but as long as you can, okay, as long as you can, because sometimes, okay, you also want to consider the past behavior of the stock, okay, the past behavior also. I give you an example. When Vivocom went up, I don't want to enter because it has the record of being a pump and dump candidates. So it is not an issue whereby, okay, I cannot ride the trend when its syndicate is goring the stock up. But the problem is I have to consider how I get out from the stocks. What if, okay, because I may not be very lucky, okay, maybe I was busy during that week. I have a lot of errands to run, I have projects going on, and I don't have time to monitor the stock. What if the stock limit down? Okay, so when that stock has a history of pump and dump, I might not be interested as well. So that's why I will look at the entire history if I can. Okay, but for trend itself, I would say 1 year is the bare minimum. And if you can, you look at 2 years, 3 years to look at a primary trend. Okay, when you want to enter, you want to precise your entry, you can scale down to maybe like looking at the 2 months and waves by waves, right?
Okay. Now, just now you share with us your process, which is TEST, right? The test process in plotting an entry for your trend following strategy. So Woon Lim would like to ask, like, how do we consider what volume is it good for uptrend entry?
Okay. A few guideline for volume that I wouldn't say is how much volume is good, but generally we want the stock go up with higher volume and retrace with slightly lower volume or low volume, and then go up again with higher volume than the volume where it retraced. This is the general rule.
So
Right?
if the stock meets your criteria, except volume is not higher than average, would you enter?
I buy less.
You will enter, but just buy with like smaller position.
Smaller positions.
Test out whether this counter really go up or not.
Yeah. Because sometimes low volume stocks can go up as well. But one thing that you might want to take care is some of the stocks, the volume is very low until the spread is big. Like for example, if you're trading in Bursa, you know that like a 2 ringgit stocks, usually the bid-ask distance is only 1 cent. But if you look at the stocks, it's like 180, 182, then maybe that one you need to be careful. It means that the volume is low to an extent, the open interest is also low. That one you need to be very careful.
Okay. Eddie would like to ask, like, I always use indicators on chart like MACD, RSI, stochastic, parabolic, SARS, and it always works to predict the stocks. Is this the correct way to understand the chart with very little risk?
For me, okay, I don't use indicators a lot. Here's the thing. Indicators, you always see people like there is like leading indicators or there are lagging indicators. But here's the truth. Indicators are just a mathematical results of historical data. So there is no way that it can predict the future movement. The only thing you can predict is you might think that is a prediction is because, like for example, MACD is trending up, it is going up, but that is trend. It is trending up. That's why it has higher probability to go higher. It is not because the indicators can do some magic. Okay? It is not because the indicators can do some magic. Indicators, my suggestion is you use as a guideline. Okay. Now, for example, meaning that if you look at MACD, it is bullish, RSI is bullish, parabolic SAR is bullish. It means that it meets a criteria. This is what I call confluence, meaning that A asks you to buy, B asks you to buy, C tells you that it's bullish, and then the stock is going up, is rebound. It means that it is good. If you want to look for MACD, you look for indicators, I would just say look for confluence and don't get overly obsessed with it. Don't get overly obsessed with it.
Okay. Now, I guess many of us also face this question. Like if we set a target for stop loss or take profit, now assuming that if the trend is in favor to us, will you suggest that we take profit when the target price is met, or you change plan as and when needed? So that is the questions by Kian Singh.
So basically for trend followers, most of the time we do not take profit. Most of the time we only move the trailing stock, because by setting a target profit, it means that you think that the stock can only go up that high. But in reality, a lot of time we have seen in the past, there is no too high for a bull. We have seen KSM going up from $2-3 all the way to 16, 17, 18 bucks. We have seen Top Glove going to like $30, a price that no one would ever imagine before. Okay, so when something is in an uptrend, I don't give a ceiling or a cap, like how far can the stock go. So what I do is basically I move up my trailing stop. If it still can go up, I will ride the whole trend until one day maybe you feel super uncomfortable that the trend is unrealistically high. Then maybe you take half profit. You get what I'm trying to say? You take half profit. Another thing that I can share with you is, for example, if you buy the stock and the stock has been going up by 100%, for example, and you feel that you want to take home a little bit, take home some profits a little bit, what you can do is maybe you sell half. You take back the cost of you putting in first. You left another half. Okay, and that is what I call free shares. So your emotional level is also decreased. So this is what we can do to compensate our emotion a little bit. But for most of the time, when something is trending up, I don't set a target profit. Okay, I only move up my trailing stops. Unless the instrument you are trading has an expiry. But stocks got no expiry. Okay, stocks got no expiry. Okay, so usually I don't set target profit all the times. Okay, for stocks.
Okay, since you mentioned about trading stock so much, so the follow-up question is there a stock trading system that can cater for executing trading stop orders?
For the way I practice trailing stop up until now, not that I know. Not that I know.
So it's done manually, correct?
Manually. You can put the price of your trailing stop into whatever application. It will notify you later. Manual. So that's why I don't buy too many stocks in my portfolio. I don't buy like 20 stocks. If the market U-turn, go down, crash, very busy. Okay. You type the trading pin, also type until your fingers become numb. Okay.
Okay, yeah, that is very interesting. All right, so I guess that concludes our Q&A session. So thank you so much, Jin Hao, for answering so many questions. Of course, we only have very limited time, and we actually exceeded like 10 minutes of this session. So without further ado, let me tell you what the Kenanga has in store for you next. All right, so the next webinar for Kenanga is happening next Tuesday. So the title is Live Chat with Tongguan Industries Berhad, Innovation for Sustainable Efficiency. So if you want to know Tongguan, I think just now Jin Hao also mentioned that industrial products is on an uptrend. Okay, so if you want to learn more about what Tongguan does, okay, come and join us next Tuesday, 11 May 2021. Okay, 8:30 to 9:45. It is happening on next Tuesday, where we get to invite the MD of Tongguan, Mr. Elvin, the Executive Director of Tongguan, which is Mr. Elvin Ang, to come and share with you about the Tongguan's company background, their recent business performance, as well as their growth plan in the future. Okay, what is their plan going into the future? And Tongguan is one of the very, exciting plastic packaging companies that you can consider to have in your watch list because it has good growth story. And I don't, of course, certainly don't want you to miss out this growth stock. Okay, so want to know more about Tongguan? Come and join our CanTrade webinar happening next Tuesday. All right. So for account opening, right? Please, if you do not have an account with Kenanga yet, you may fill up this online form, at www.cantrade.com.my/open-account-form. So once you put in your details in this form, then Kenanga will arrange a friendly dealer representative to attend to your account opening request. So for those of you who have not had a Kenanga Treasury account, you may fill out this interest form. So Kenanga will arrange a dealer representative to cater to your needs. All right, so I put the next webinar link and also the account opening form link in the live chat and also in the chat room. So please, register for our next webinar as you can learn more about Tongguan. All right, so with that, I want to thank all of you for staying up until this late to join our CanTrade webinar. And I want to thank Jeen Hao for sharing with us, should we do trend following or should we follow news? Okay, so today we learn a great deal about trend following and also the TEST process on how we can do trend following strategy. Thank you so much, Jeen Hao, for sharing with us your strategy. And thanks, everybody.
Thanks, Chen. Thanks, everyone, for joining.
Yeah. Thanks, everyone. Stay safe. For those of you who are tuning in from KL and Selangor, all right, adhere to the SOP and be safe in this pandemic in the MCO, right? So for the rest of you, also have an enjoyable Raya and also adhere to the SOP. All right, so bye everybody. This is Shen Chu signing off.